China is following the same financial principles that helped America become the world's leading economic power in 1944. When people think about Bretton Woods, they imagine a meeting that changed the world. The meeting only confirmed a shift that had been building for decades. And today, China is building many of those same foundations. To understand how, we have to go back to July 1944, Bretton Woods meeting. Leaders from 44 countries gathered in Bretton Woods, New Hampshire, to decide on the currency for the world trade after World War II. What would the global financial system look like after the war? The answer had already been decided by everything America had built before the meeting even began. The United States held around 70% of the world's official gold reserves. Its factories had become the largest industrial base the world had ever seen. While much of Europe and Asia had been devastated by war, America's economy had grown stronger. It had also become the world's largest creditor, lending money while other major economies were struggling to rebuild. Those weren't just economic advantages. They gave the rest of the world confidence that the US dollar could become the foundation of a new financial system. Bretton Woods simply turned that reality into official policy. The dollar became the center of global finance, not because America demanded it, but because America had already created the conditions that made it the obvious choice. That's the lesson most people overlook. Financial leadership isn't created in a single meeting, it's earned over many years. And once you understand how America reached that position in 1944, China's actions today begin to look very different. If you're enjoying connecting the dots behind global finance, not just learning isolated facts, subscribe to Financial Cycles. Because history doesn't just explain how financial systems are built, it also reveals where the next one may come from. If Bretton Woods didn't make America the world's financial leader, what did? It wasn't a single meeting, it was the result of decades of economic strategy. Long before 1944, the United States had been building the foundations that every global financial power depends on. It built the world's largest industrial economy. It accumulated enormous gold reserves. It became the world's largest creditor, financing countries that needed capital while much of the world struggled through war. At the same time, New York was steadily becoming a serious rival to London. That shift mattered more than most people realized. For over a century, London had been the heart of global finance. International trade was financed there. Global investment flowed through its banks. And the British pound was the currency much of the world relied on. But financial leadership isn't permanent. It follows economic strength. By the end of World War II, Britain was no longer in a position to support the financial role it had held for generations. Years of war had left the country heavily indebted. Its economy was under enormous pressure. America, meanwhile, had moved in the opposite direction. Its industries were expanding. Its financial position was stronger. Its gold reserves had reached unprecedented levels. The world wasn't simply choosing between the dollar and the pound. It was choosing between two economies, moving in completely different directions. Even at Bretton Woods, there wasn't universal agreement that the dollar should become the center of the new system. John Maynard Keynes proposed an alternative, a neutral international reserve asset called the Bancor. Instead of relying on one nation's currency, international trade would be settled through a shared global unit. It was a bold idea, but history rarely follows the strongest argument. It follows the strongest balance sheet. The United States had the industrial power. It had the gold. It had become the world's largest creditor. Those realities gave Washington the leverage to shape the post-war financial system. The Bancor remained an idea. The dollar became the world's reserve currency. That's why Bretton Woods is often misunderstood. The conference didn't create America's financial dominance. It recognized a financial reality that had already been built. And that's why China's strategy today deserves attention. Because before a nation can influence the system, it first has to build the economic foundations that make the world trust it. So what exactly is China building? Not a new global currency, not yet. Just as America spent decades creating the conditions that made the dollar indispensable, China has spent years strengthening the foundations that could support a larger financial role in the future. One of the clearest examples is trade. Through the Belt and Road Initiative, China has financed and built ports, railways, and power plants. These projects across Asia, Africa, the Middle East, and parts of Europe do more than expand trade routes. They create long-term economic relationships that deepen China's influence across multiple regions. That matters because financial leadership rarely begins with money alone. It begins with trade. It begins with investment. And over time, it builds trust. China has also been steadily increasing its official gold reserves. Gold doesn't replace a reserve currency. But throughout history, it has reinforced confidence during periods of financial uncertainty. At the same time, China has invested heavily in alternatives to the financial infrastructure dominated by the United States. Its cross-border interbank payment system, or CIPS, provides another channel for settling international payments. It's still much smaller than SWIFT, but that's not really the point. The goal isn't to replace the existing system overnight. It's to build an alternative before one is urgently needed. China's strategy became even more significant after 2022. When Russia's foreign exchange reserves were frozen, governments around the world saw access to the global financial system could become a geopolitical tool. For many countries, the lesson was about reducing dependence on any system controlled by another major power. There's another lesson that often gets overlooked. China isn't only studying America's rise, it's also studying Japan's failure. During the 1980s, many believed Japan would eventually overtake the United States as the world's leading economic power. Instead, the Plaza Accord and decades of economic stagnation changed that trajectory. As Japanese interest rates fell, enormous amounts of capital flowed into U.S. financial assets, reinforcing America's position. China appears determined to avoid repeating that experience. It has moved far more cautiously when opening its financial system and internationalizing its currency, because preserving long-term financial stability matters more than moving quickly. None of these actions prove that China will replace the United States, but together they reveal something much more important. China isn't waiting for a new financial order to appear, it's preparing for the conditions that could make one possible. If China is building many of the same foundations that helped America rise, why hasn't the financial system already changed? Because becoming the world's financial center requires far more than economic size. It requires trust. And trust is one of the hardest things to earn in global finance. The US dollar remains the world's dominant reserve currency. Global trade is still heavily priced in dollars. Most international commodities, especially oil, continue to be traded in dollars. Central banks still hold a significant share of their foreign exchange reserves in dollar-denominated assets. And during periods of uncertainty, investors continue to treat U.S. Treasury securities as one of the safest places to preserve capital. These advantages reinforce one another. The more the dollar is used, the more valuable the system becomes for everyone already inside it. That's why reserve currencies rarely disappear overnight. Britain didn't lose financial leadership in a single year, and America didn't gain it in a single conference. The transition took decades. China understands that reality. That's why its strategy has been remarkably patient. Rather than trying to force the renminbi into the center overnight, China has focused on expanding trade, strengthening financial infrastructure, increasing gold reserves, and encouraging international transactions. The goal isn't to replace the dollar tomorrow. It's to reduce China's dependence on a financial system built around someone else's currency. Some countries have already started settling portions of their energy trade in currencies other than the dollar. If that trend continues, those countries won't need to hold as many dollars to buy energy. And if fewer dollars are needed, demand for dollar-denominated assets, including U.S. Treasury securities, could gradually weaken over time. That doesn't mean the dollar is about to lose its position, but it does explain why China is investing in alternatives. History shows that reserve currencies don't disappear overnight. They become a little less essential, one step at a time. And that's exactly what makes today's changes so easy to underestimate. History shows that no financial system remains unchanged forever. The Dutch guilder dominated international trade. Then it gave way to the British pound. The pound eventually gave way to the US dollar. Each transition looked different, but they all followed a familiar pattern. A rising power expanded its economic influence, while the existing leader gradually became more financially constrained. That doesn't mean America is about to lose the dollar's global role. The United States still has the world's deepest financial markets. Its treasury market remains unmatched in size and liquidity, and the dollar continues to benefit from decades of global trust. Those advantages should never be underestimated. But financial leadership also depends on maintaining the conditions that created it. Today, the United States faces challenges that didn't exist when Bretton Woods established the post-war order. Federal debt has climbed to nearly $40 trillion. Annual interest payments have grown to more than $1 trillion, consuming an increasingly large share of the federal budget. At the same time, more countries are exploring ways to settle portions of international trade without relying exclusively on the dollar. None of these developments by themselves are enough to rewrite the global financial system. But together, they suggest that the international monetary system is becoming more flexible than it was a generation ago. Meanwhile, China continues expanding trade networks, investing in financial infrastructure, increasing its gold reserves, and strengthening long-term economic relationships across multiple regions. Viewed individually, these developments may seem unrelated. Viewed together, they resemble something history has shown before. Not the replacement of a reserve currency, but the long process that often comes before it. China isn't repeating the decisions made at Bretton Woods. It's following many of the same principles that allowed America to arrive there with the strongest hand. So, is China doing what America did in 1944? Not exactly, because history never repeats itself in the same way. The world is different. The global economy is different. And China's path will never be identical to America's. But the pattern is familiar. Before Bretton Woods made the dollar the center of global finance, America had already spent decades building the economic strength, financial credibility, and international relationships that made that outcome possible. The conference didn't create America's position, it confirmed it. China has spent years acting on that lesson. Rather than trying to replace the dollar overnight, it has spent years expanding trade and investing in infrastructure, strengthening financial institutions, increasing its gold reserves, and gradually creating alternatives within the existing financial system. Whether those efforts eventually reshape the global monetary order is still an open question. No one can answer that with certainty. But history suggests that major financial shifts rarely begin with dramatic announcements. They begin quietly as countries build the foundations that make larger changes possible years later. That's the real lesson of 1944. By the time the world recognizes a new financial order, most of the work has already been done. The question isn't whether history will repeat itself. The real question is whether we're watching another long transition before we've learned to recognize it. At Financial Cycles, we look beyond the headlines to understand how money, power, and history shape the world around us. If that's the perspective you're looking for, we'd love to have you with us.